So here we are, everyone. Thanks for joining us. We're going to get started promptly. I expect there'll be people filtering in over the. Thanks for joining. I've got Tony here with me, and I'm just going to do a little bit of an intro, and then really pass over to Tony to share his expertise and his thoughts on where the market's at. Just a bit of housekeeping. The toilets are over here, and in the event of an emergency, the exits are just over there. So now everyone's all settled in. In terms of if you have any questions, there is a chat feature. We've disabled cameras and microphones just so we can make sure things run sort of smoothly. But if you do have any questions, please bung them into the chat or the Q&A, and probably the chat's the best place. And then at the end of the session, we'll run through those questions and we'll get to as many as we can. So just use that as we go. Without further ado, let me just share my screen. I'll bring up the presentation, just do a little bit of an intro, as I said, and then we'll hand over. Okay, so this webinar is a rerun of something that we did to our local market here back in February. And it's all about giving you guys some insight into where the market's at and some things that you can do just to be prepared and to manage the way that the industry's looking over the next sort of 6 to 12 months. So before we get into that, I'm just going to headline, sort of set the scene. So Tony's here. He'll introduce himself, but he's going to speak for about 20 minutes probably. So, and then I'll speak for probably about 20. So we should wrap up well within the 60 minutes with a few questions. So Tony will set the scene, and then I'll talk about some of the areas of opportunity that sit within even within a declining market. And then talk about this concept of risk financing, which is how you can work within your business to manage, mitigate, eliminate the downsides and the threats so that there's a lot more focus and positive upside coming out the other end. Bit about Builtin. We've been in the industry for 20 years, working exclusively with builders and other construction trade professionals. We've 11 staff now based out of Tauranga, and we've got a staff member who's also based in Christchurch. We've got many thousands of customers nationwide, ranging from sole traders to employees that have tools cover, all the way up to multi-million-dollar housing companies, franchises and the like within construction. And as a small business, we're also a member of a network called Steadfast, which is Australasia's largest insurance broking network. So we've got that sort of personal approach. We're very much a family business here, but we have the scale and the strength and the negotiating power of one of the world's largest broking networks now. Our mission is to help construction professionals manage their risk by being experts that are responsive and easy to deal with. So that's what our customers tell us they want, and that's really what our focus is, helping you manage risk. That expertise and focus on construction. We always aim to answer questions, emails, phone calls as quick as we can, and we try and reduce all the complexity of insurance and risk down to the kind of layman's language that everybody wants to hear. In terms of our values, we give a shit. We care about our clients. You can rely on us because we do what we say we'll do. We look exclusively after construction, as I said, and that's not just our clients, but things like this seminar, the articles that we write. We are looking at delivering it via podcast as well. So just in terms of an easy way to help get the message out about how to manage risk, what the issues are, ins and outs of insurance, that kind of thing for the construction industry. We go the extra mile to find solutions. Again, if we can't do it, we will suggest something that can help. And of course, we're real people, so we're that family business. And we offer a full range of risk management services. So from risk assessment and advice, insurance, which is sort of our core, bonds, we advocate on claims for customers, and we talk and help develop business continuity plans, disaster recovery, and that kind of thing. Really, so without further ado, I'll just stop sharing and hand over to Tony to give his part of the presentation.
Thank you, Ben. Also from me, thanks everybody for joining us tonight. Just a little wee bit about me. I am a friend of Jim and Carol's, and I've worked in the building industry for the last 50 years. So I've experienced a few things. I've seen about 4 or 5 decades of boom and busts, and so I've seen a few things in my working life. And over the next 20 minutes, I'll share with you some thoughts, comments, and stats, the status of the market, focusing around what I believe are our economic drivers that influence the outcomes, both good and bad. I'll also cover some trends evolving in the building and construction sector and finish with some takeouts, which are really good basic principles to think about, which you may choose or already have put into practice in your businesses. I think firstly to say things are easy at the moment is an understatement. Not a lot of highlights on the economic front. We have instability issues, global tension, we have internal division, global division, which can only cause disruption and distraction in dealing with the main issues and challenges we face as a country. Most of what I talk about is a bit negative to start, and there will certainly be a leaning towards the building and construction segments, but applicable in some way to all. So not a lot of fun to be in business at the moment, so it's tough out there. However, I suppose, when has business ever been easy? I think the first bright spot has really been the change of government, and that's probably not a bright spot for everybody, but in fairness, we have seen a lot of poor management in a lot of areas by the previous governments, and local governments are also not exempt. There has been global influences experienced a pandemic, so in all, I suppose we're paying the price now for poor performance in a lot of areas. I think what's important is that people need a reason or something positive for us all to turn the corner. Hopefully this change of government will bring back confidence, and that confidence is a really important word because we need that confidence back into a pretty tough market. So we'll certainly all be looking with interest how this new coalition lot implement initiatives. I think whatever they do is going to take some time to materialise because, yes, there's a lot of initiatives and so forth that will be rolled out, but before they really have an effect in the marketplace, there'll be some time around that before we see that significant improvement, but hopefully sooner than later. And looking at the market, there are 6 economic influences and challenges that will affect favourable outcomes over the next few years. One's inflation. Second is interest rates. Third is immigration, infrastructure deficit, cost of living crisis, and also international turmoil, which is really conflict out there. Regarding inflation, global inflation is easing back. It has been stubborn, sitting at about 5%. It's more than double the Reserve Bank target. We were sitting at 6%. So we are actually heading in the right direction, but as I see it, the damage has already been done. Building costs over the last 2 years have skyrocketed, driven by demanding and reckless spending. I think we're managing inflation now, but it's going to take 18 to 24 months to get things under control. So as I see it, hard times ahead and all headwind at the moment. What has been the main contributors to inflation has been food, housing, cost of utilities, fuel, transport, and lower productivity brought about by demand, money availability. Also, migration levels have hindered rather than helped controlling inflation, particularly Auckland-driven. As it relates to interest rates remain relatively high, with the OCR sitting at about 5.5, and not a lot of relief in sight as inflation reduces ever so slowly. I can't see us in the next 12 months getting down to a level where meaningful interest rate reductions will help those struggling. In fact, I don't think we're at the bottom, with maybe a couple of hikes that could still see further lifts that will cripple some, although banks are looking at initiatives to insist. So it's going to be really, really interesting to see how the powers to be manage that side of it. However, for some, I think it's a matter of how long they can hang on. Drawings on KiwiSaver for hardship is up over 50%, with 25 million withdrawn from savings in the past 12 months. Also, there's been 318 billion of household debt, which is due to be refixed in the next 12 months. So I see big increase in mortgage sales unless the banks step in to assist, and the banks need to actually provide some assistance now They just need to see what's going on out there and be mindful that they can make some difference. For the building industry, interest rates are a big driver. Right now, the second-hand market is cheaper than building new, normally the other way around. However, prices for second-hand houses are increasing and demand is improving, with a forecast that they could go as much as 9% by the end of the year. I can't see that. However, hype drives FOMO. Plus, we've got a lot of migration at the moment. They need to be housed, and that's creating rent hikes, and it's also pushing up pricing for houses. That's probably mainly in the metros. As the second-hand market moves up, we do know that new builds also follow. When the second-hand market moves, about 6 months following, the new market moves. And that trend's been, the correlation between those two have been pretty much moving that way for years. Immigration, the floodgates have certainly opened in 23 with 237,000 people coming into New Zealand and 118 left, gain of 118. That's the highest on record. A lot of East Asians in the mix, with around 60% settling in the Auckland region. It's interesting to see that this coalition government, it'll be interesting to see what this coalition government does with this trend, which is putting huge stress on infrastructure. Talking infrastructure deficit, this is a big one. How do we fund what's needed? And so much is needed right across the country. Councils are struggling to balance the books and keep rate rises in check. How this government manages initiatives is going to be huge, as we are so far behind the 8 ball following reckless and wasteful spending by previous governments. So this is not an easy fix, and I believe will take some time. The next big one is the cost of living crisis. The average household has increased 7% in the last 12 months. So higher prices for interest payments, grocery food items were the main contributors. Labour shortages are slowing economic growth and exacerbating price increases. 30% of businesses have been advertising vacancies for over 6 months. Factors such as our isolation, currency and economic structure that contributes to overall high costs. So the cost of living out there is a real problem for all households. And, we're not going to escape that, and it's going to take some time before we've got a handle on that. Global turmoil, instability, the Ukraine and Gaza wars are unrelenting, with fear they will escalate. China-US relations at an all-time low, conflict in the Red Sea, all this, and us piggy in the middle having high trading needs and ties with aggrieved parties. And in the Donald Trump equation, maker or breaker, regardless, as I see it, the world's on a knife edge, and let's hope diplomacy prevails in that area. Okay, for the building industry, consents don't make good reading. I know this is all a bit negative, but remember that there's always opportunities wherever the market's at. Dwellings are down 25% to 37k year ending December 23. That's a massive drop from the 50,000 the year before. And the forecast is for 26,000 per year to be built over the next 5 years. So I suppose it's going to be certainly headwinds in that building sector for the next few years. Non-residential was only down 1%, supported by strong commercial segment, and that sort of still seems to be ticking along, although it is starting to show some signs of slowing down. The residential numbers are still not bad considering what they were 4 years ago, but there are a lot of building companies out there hurting. Some of the group home building segments have reported they're down over 60%. Others have not sold a house since May last year. Some are doing okay. Brands that are well capitalised will ride the storm by scaling back, dealing with what they have got, and others will be stretched, carrying debt and specs, land, and a shorter cash. A lot out there are hoping they can hold out and turn until the tide turns, and it will turn. I'm not sure it'll become quick enough for some, and we could see an increase in the number of defaults, liquidations as cash runs out. The smaller independent guys will ride it through as they aren't carrying large overheads like some of the franchise businesses. Regardless, it does emphasise the importance of having robust risk management initiatives as part of your plans, and I urge you to all have a look at that and ensure that you do, and you are looking at how do you mitigate risk. Housing costs are a big issue for New Zealand. Compliance is still a big factor. The square metre rate's running around $3,900 a square. It's about a 35% increase. Add in land and packages are up around $1 million mark, and Queenstown's even worse. Some saying costs are about 8,000 a square metre down that way. So handbrake is certainly on affordable housing in that region. As capital tightens, I see less investment in large, complex, multiplex apartment-type projects within cities, opting for a swing back to single-level housing on greenfields on the edge of our cities. They cost less, and there's less risk for lending institutions. So the housing market is a bit of a knife edge and no easy fix, other than the fact that we are underbuilding, and we will need government initiatives to get things going. I think it's important to watch the key market indicators of confidence, interest rates, the real estate second-hand market, because there is that strong correlation between new and second, build costs, land affordability, all of these will be critical in turning the housing market around. Businesses will need to have very good value propositions. And an important point that I'd like to make is that they need to have a point of difference. You need to stand out. If there's something about your business that's different, then make sure that, hey, you have that point of difference as being way up there and way up the front, that people can see it. Commercial has been strong, with the construction sector reporting strong portfolios. Commercial investors have enjoyed the good times. Hence, consents have been holding pretty much okay. I've just sort of like an example, probably in Tauranga here is the Lakes, where that subdivision has filled up in the last couple of years, but things are certainly slowing in the commercial. So look, sorry, not a lot of positives, just in this last sort of 10 minutes of discussion, but however, there's some better stuff to come. Manufacturers in the building sector are reporting tough times, so they're not getting away free, however, have adjusted to market conditions, and that's a key takeout. Managing the downside, making smart moves in tough times. Adjust your business to suit the market. Don't wait. Don't carry unwanted costs, because you're just losing dollars. The next 12 months will be key on how quickly this government gets its initiatives underway to stimulate activity. Previous governments have had initiatives, but some couldn't execute. Hopefully, they will do a lot better. So what does the future look like? I think our industry will continue to evolve. There will still be large labour shortages. However, some trends to evolve will gain momentum. And I think here's some opportunities. Technology is a big one. That will provide opportunities to create that point of difference that I was talking about, that you will need in your businesses. People are looking at, why do I choose you as a business? And that's that point of difference. It needs to stand out. So if you can do that, then certainly that will help people be choosing your business over someone else. Things that I see are some trends that will create emotional touch points. Sustainability and green building. I think there'll be some focus around that, with concerns over climate change, the environmental sustainability. There'll be a significant push on green building, focusing on energy and efficient materials. So I think that's with us to stay, and there'll be continue to be focus around that. More technology usage will bring about more efficiencies on building sites. So that's just creating smarter ways to build and using technology to do that. Robotics, automation featuring things like 3D printing. Automation will generally bring around efficiency, accuracy, and also safety. Prefabrication and modular, I don't believe it'll go away, and we'll see companies continuing to experiment with these initiatives. I know that they haven't been too successful across the country in the past, but I still think there's a place for prefabrication and modular. Building information modelling, BIM, I think is about having a shared knowledge of the resources of how a business functions. So informed decisions can be made, and this in turn will prove essential in enhancing better building design, more cost-effective construction, documentation and project management, facilitating extensive communication across all of the stakeholders. So that building information modelling will be something that we'll see a little bit more of. Material innovation, more plastic composites, engineered woods will be developed and marketed. So I see improvement in competitive innovation without compromising quality. So safety, there are no shortcuts here. Safety is becoming more of a culture in business rather than just compliance. So business of safety is, I think, now habitual, and we're all practicing that in our businesses. Investment on tech and innovation, surveillance systems to keep people safe will continue to evolve. And I think there'll be more focus on data analytics, which is information systems being well informed making better decision, I suppose, making across our businesses and what we're doing. So companies that are embracing some of these trends will be in a better position to navigate through what I believe a pretty challenging market. But there are some takeouts, and these are just some basic principles which, when applied, I think can actually make some difference to your business. So I'll just run through a few of those. The first one is just keep close to your customers. If there's ever a time, it is now to listen to what they have to say. Focus on your touch points. Normally in the sales process, you get 2 or 3 touch points where the customer is going to be actually coming back for a second or a third look at you, or they're actually going to move on to the next person. So what you've got to do is that in the sales process is find out what's really important to that person. And once you've found that, then make sure that you repeat it 3 or 4 times, during the process. What that then shows to your customers is that you're listening. And what they'll do is they'll go away and talk about that and say, yeah, well, he really listened to me. He mentioned that, kitchen was really important to me. So those sort of things those touch points are really, really important to make sure that the people are coming back and giving them a reason to choose you. Reposition yourselves strategic for the next economic cycle. Every 10 years, there's been this sort of boom and bust. This last cycle has probably been the longest one that I've seen, but we're now certainly in very, very tough times. Be bold, make changes now that will enable your business to come out better than your competitors when the market turns. So you've got a chance right now to look inside your business and see what are you doing now, what are you not doing now, and you've got a chance to look outside of your business on what are the opportunities for me to do and what changes do I need to make. So reposition yourself strategically for the next cycle. Be visual, be seen, always looking to get a better understanding of what's going on and watch for the signals out there. What are the people's critical needs and concerns? What are the things that are important to them? What are the things that are important to you? And then do something. To say, if you do nothing, then you're going backwards. So take action and don't be afraid to ask the questions and challenge the status quo and maintain focus on you're there to help, because that's what you are doing. So be visual in your businesses. People want to see you. They'll want to see who the boss is, and so forth. They want to shake his hands and know who they're dealing with. Financials, know your numbers, understand and monitor closely. I know you all do this. They're a major driver of your business, particularly cash. Do your health checks regular. Early intervention can have positive outcomes. Also mitigate risk, and if the worst happens, what if you plan? If you don't have a plan, make a plan. You need to have a plans for that black hat day. So you need to have a look and see if the worst happens. Yep, I know what I'm going to do. Communication, increase across all stakeholders. A lot of knowledge out there. A lack of communication is the root cause of many failures, as I've seen it over the years. Record your discussions, particularly the ones that require action or follow-up that avoids arguments at a later date. Another good takeout is add value. Be seen as adding value rather than just taking people's money. That extra bit of value can help the customer through their loyalty and also business sustainability. An easy one, manage your costs. I say it's an easy one, it's not really. Be targeted, focus on the essentials, not the nice to haves, and just adjust to the market. So if it's an essential part of your business, yep, you need to make sure you keep that cost there. But if it's just a nice to have, get rid of it. Monitor the market segments that affect your business and your local economy. So not just your business, have a look at what's happening in your local economy and watch those segments and see what is actually happening, what's working and what's not working. Focus and invest where the dollars and the opportunities are. You will make better decisions with accurate knowledge of what's happening, where and when in your businesses. The next takeout is continuous improvement. Have it as a mandate or goal. Good business is about getting better. So continue to upskill your employees using technology. Keep polishing your business. Don't try and eat an elephant. Take small incremental steps and you'll get there at a cheaper investment than trying to take big quantum leaps. Discipline. Maintain your disciplines in your business. Be strong and consistent with your systems and processes. I've seen a lot of businesses that got great systems and processes, but they've got very poor discipline in their business. And what ends up happening is that they end up not getting those systems and processes robust because they don't maintain the disciplines. So review on a regular basis as things change. Be flexible on your feet. Also, in difficult times, it is easy to give in. Maintain your disciplines. Don't compromise. The last thing I've got on the takeouts is just your culture. Don't lose sight of the culture. It is who you are. Once it's gone, it's really, really hard to get back. So it needs work every single day. It's no different from other key drivers of your business. But importantly, I suppose, as it relates to this last one in culture, is the fun factor. So if you can have some fun, take it when you can, as there needs to be a balance between business and pleasure. Thanks for your time.
Thanks, Tony. Just a question before I move on to my piece. You talked there about having systems and processes, but discipline being the key. In your time, can you put your finger on the difference between a business that does implement or have that discipline and those that don't? Is it leadership from the top, or what's the sort of secret to it?
It is having every leader. It is leadership. It starts with leadership, Ben. But everybody in the business needs to know. So it's about communication of what are the systems and the processes, and then everyone's got to buy into those systems and processes. Quite often you see people have got, so they've got them written down, but they're not practicing them every day. So it starts at the top, and then it filters its way down through the businesses. And you'll find that those businesses that have got good, robust systems and processes don't have the same problems as some of the other businesses that are not actually practicing those every day in their businesses. So discipline is huge. And also too, some things you got to update. Some of your systems and your processes you need to be looking at on a yearly basis, because times are changing, and what was good yesterday may not be good tomorrow. So you've actually got to look at actually revisiting those things. And then once you've revisited, put them in place, communicate them out to everybody, and then say, this is how we do. So it becomes habitual in your business.
Okay. And that's hard, I guess, isn't it? If you've been operating a spreadsheet for many years and then you've got to move to a project management software, it's difficult.
Look, nothing's easy, but business has never been easy. The thing is that you've just got to embrace the things if you believe in it, and the people that are working with you believe in it. You will find that everybody on board, you'll get them underway and get it working for you.
Okay. Thank you very much. So please fire those questions through in the chat, and grab you slide along, and I'll slide in. And at the end, we'll cover off any of those questions that come up. So I'm just going to share the screen again and run through my presentation briefly. And it's really building on Tony's sort of conclusions there. The market is what it is, and we don't have control over what's happening to it, but we've got to adapt to it. So my key message is that even within a market that's declining, there are pockets of opportunity, and if you know where those are and you can take advantage of them, then you will grow, you'll be successful, and you'll survive out the end of this challenging time. So what I'm going to just highlight, and Tony's touched on them, is some of those trends, not all of them, but just throw some out there. In your market, in your area, there might be other opportunities, and it's just a case of, as Tony said, do something, pivot towards those areas where the growth is. And so you're not just, sort of drifting through and trying to survive. You're actually taking advantage of those opportunities. So he mentioned it, green buildings, massive trend globally, and for good reasons. Decarbonisation and energy efficiency is top of mind for chief executives. So they are driving it from the top because it's important as part of, their sort of the direction and the positioning of their business. And regulation is also having an effect there. So new rules, government rules, climate targets and carbon credits and all of that thing are driving a focus on sustainability. And then for building owners, they actually get a premium from their rental rates on green buildings. So companies are prepared to pay more, so there's an incentive to build it in a more sustainable way because the returns are higher. You're also seeing, and we saw that it was an article on the news this morning, there are more younger people entering the market, employment market, are looking for this kind of thing. They're looking for companies that fit their values almost more than the actual job role itself. So these values are important, and so they're looking for them as cues for the businesses they want to go and work for. Secondly is around medium density housing. So there's an increase in demand for medium density through changes to local plans and different councils. And so that is a key area of opportunity where it's about the infill and intensification in some areas rather than, sort of single level housing out there. Although those markets do always come and go, it's something to bear in mind that this may be a more robust and sustainable part of the market just now than the single dwelling piece. Another area of long-term growth is around accessibility, and that's whether you're building new homes and making they've got all those accessible features, or talking about retrofitting existing buildings and having the capability and positioning your business, marketing your business with an expertise in retrofitting and making buildings accessible. So there's a significant portion of the population that are reported to have some form of disability. We've also got an aging population, which is a long-term trend, who require and will benefit from all of those features in a home just to assist them as they age. And then there's also legislation and requirements around new housing and around certain features that both commercial, particularly commercial, but also residential buildings must have. So if you can get a handle on that and position your business, then you're going to be able to take advantage of that trend disproportionately. Tiny homes and modular is obviously another one that has been front of mind for a while, and as Tony said, sort of it's players have been unsuccessful in sort of factoryizing this stuff, but there is a long-term demand for it. The reason for that is that there's a broad demographic that this tiny home market appeals to. You've got the new home buyers who have to downsize the footprint in order to be able to afford. You've got the older people who are downsizing because they don't need all of that home and they want to release some capital. And then you've just got, the people that want to go off grid, that have that sort of more eco-friendly mindset and prefer the sort of the smaller footprint. And councils are making changes, and regulation at government level is also enabling this market and making it a bit easier in terms of consenting and those sorts of things. So expect that to continue to grow. Another key one down here in the bottom of the Pacific is around disaster recovery and resilience. So we saw that a year ago with Cyclone Gabriel, and we've had earthquakes, and I think aside from Bangladesh, we are considered to be the most at risk of natural disasters in terms of any country in the world. So those floods and cyclones predicated a lot of work around policy from councils, identifying areas that are at risk. Insurers are coming out of the market in certain areas, or increasing premiums and costs as well. So part of that whole dynamic is making sure that buildings are more resilient. That's both in the construction, and we've seen that through sort of the innovations that came after the Christchurch earthquakes. We expect to see the same following the floods and cyclones, but also so there's work in the remediation of those events, but there's also work around prevention and durability. So what can be done to existing buildings or around existing buildings or in communities to prevent or mitigate the risk of water flooding areas and particular wind damage. So whether that's a tightening of regulations or whether it's simply more resilient construction, yet to be seen. But again, it's a potential area of opportunity. And so that was just a whistle-stop tour through some of those examples. There's plenty more. There will no doubt be regional ones as well. So it's just a prompt to say, well, thinking about your own market and your own expertise, your own area of expertise, what can you do to position or reposition your business to take advantage of those trends in the current environment. So that was part one. Part two is I'm just going to talk about this concept of risk financing. And this is really the way to fine tune your business to eliminate the risk or mitigate the risk side of it. Get rid of the threats to your business as much as you can so that there's much more upside. There's much more on the positive side of the ledger as opposed to the threat side. And if you can do that, then again, business is easy. As Tony said, business isn't easy, but this is one way that you can really structure it and strip out a lot of the risk side, and that's fundamental. So, what is risk financing? Risk financing is a concept, and it's about determining how any organisation will pay for loss events in the most cost-effective, the most effective and least costly way possible. So, if you can identify, here's a risk to our business. What are the ways that we can eliminate that risk or mitigate that risk for the least money possible? Then that's what risk financing is. It's a daunting topic. I wouldn't expect anyone on this call to know how to do it individually without help, but it is something that we can help with, and that as a mindset, if you have it in your business, it is going to assist to eliminate and mitigate that threat side. Okay, so the other key point is that uncertainty affects objectives. So if you've got uncertainty because of the way the economic environment is, or the regulatory environment, or because your systems and processes aren't up to scratch, or you've got issues with staff or customers, or supply chain, and are you going to get your stock, all of that uncertainty can affect how you are achieving the goals in your business. So if you can start to eliminate that uncertainty, then it makes it easier for you to effectively achieve your goals. So that's what this process is all about, is reducing or eliminating uncertainty. Okay, so I'll move past this, but eliminating threats, as I've sort of talked about, leaves more room for those opportunities. Just to put it in a little bit of context while we're talking about this, from an insurance perspective, insurers have more than doubled their losses in the last 5 years compared to the 5 years before that. So that's the effect of climate change and those natural disaster events that we've had over the last half a decade. And in particular in 2023, and this was even by the first quarter, the losses insurers had incurred had exceeded all of 2022. From weather-related events. So this stuff's happening more and more. Insurers are bearing the brunt of it. That's why you're seeing premium increases. But that's the sort of the point, is insurance is becoming less cost-effective as a means to mitigate risk. So you've got to look at all of the ways that you're mitigating risk. Insurance is one aspect of it. It's a very, very important aspect. But insurers are starting to increase premiums, increase excesses, reduce cover, reduce limits, and reduce the capacity. So it's becoming harder to find and more costly. So we've got to look at those other options. And also, we're putting this in the context of the true cost of risk. So risk, when you work out how much it's costing you, isn't just about your insurance premiums. It's about all those other factors as well. So what are you? So external risk transfer, that's the top one. That's your insurance premiums. But what else are you spending money on that is in that bucket of reducing risk for your business? So what are you self-insuring? That's all your excesses. That's all the things you've chosen not to insure. That's all those liabilities that aren't insurable, like WorkSafe fines. And then risk mitigation. So what are you doing to mitigate risk in other ways? Maybe that's through training programs, your membership of trade associations that give you support, advice, and contracts and those other things that, again, help to mitigate risk. Members of Hazard Co, SiteSafe, all those fees, again, help to manage risk. What are you paying towards external consultants like insurance brokers, to business coaches, to legal advisors, to accountants? All of those things are costs to help manage risk, so they all get bundled in here as well. And then there's the cost of missed opportunities. So what haven't you invested in that you could have that would have been an opportunity? So those are all aspects of risk that we talk about holistically. And risk financing is a process. it can be a daunting process, but it's, you know, people who know how to do it and have experience, do it all the time and understand it and can help you with it. The first thing is to identify what the risks are. And you know, that can be as simple as sitting down and saying, well, what are all the key elements of my business? I've got my staff, I've got my customers, I've got my supply chain, I've got you know, my assets. What are the issues that might arise in each of those different areas? And you note down 5 things. Boom, you've got a risk register. There's more rigor that we can add, and there'll be a lot of gaps that we can start to identify. But that's a really good place to start. Then you're starting to quantify those and say, which are the big ones, which are the not so important ones? And you do that by assessing the likelihood of them happening. And there's a bit of data that can go with that, but it's also, you know, a bit of a gut feel around ranking what's more likely than another. What's the consequence if it did happen in terms of cost? So, you know, an earthquake's going to be massively costly. Someone stealing your tools it might happen more frequently, but not as costly. So you can sort of start to understand the cost of each of those. And once you've understood the cost, then you can look at, well, how do we mitigate this? Actually, do you know what? I'd rather not insure my tools because you know, I'm paying $600 or $700 a year and I've got $1,000 excess. So I'll just save that money, and then, you know, if I have a claim every 3 years, well, I've saved that money. That might be one way that you're analysing that risk. On the vehicle side, you might say, well, actually, I'm going to go just have third party only as an option, and then you can do that right across the spectrum. So that's that part of the process. And so I'll run through this briefly, and this is how we help companies identify risk. We have these different categories, and within each of these categories, there's a set of risks that may or may not be applicable, and we just work through those. So here's an example. Under that natural risk category, there's the risk of severe storms, floods, cyclones, earthquakes, tsunamis. Wherever you are in New Zealand, some of those may or may not be more applicable, more likely to happen. What's the loss value? And then you've got an annualized value. You know, that's the per yearly cost of a 1 in 25 year event that might cost you $1 million, and start to quantify each of these risks. You can put them on a matrix to identify what are the big ones, what are the small ones, what are the ones we really need to deal with to make sure that because if they happen, they're going to be big versus the little ones where we don't have to worry so much. And then that all goes into a risk treatment plan. So we create that plan, and then that's the basis for you going ahead to manage all that risk, and business goes forward. The risk treatment part, just to give you a bit of a clue, if bad debt was a risk to your business, and that's a likelihood of a bad debt once in every 5 years, and the loss value is 50,000, you've got an annualized value of bad debt of 10,000. So what are you doing about it? Well, we can actually insure that risk. Or we can use invoice finance or something like that, or we can treat it as well through a credit control process. So then you've itemized that, you've documented it, you've got a process, you can move on to the next one. And you might have an annual review and a person that's responsible for just saying, well, what's our bad debt situation? Did that process work? Do we need to refine it because we had a loss, or we've saved a bunch of money on bad debt because of the changes that we've made? And then from there, you move into another area of risk management, which is about what if there's a major crisis, and how do we make sure the business can continue if that happens? And this is just a photo from here in Tauranga a month ago, where a big hole in the road opened up, and the council said everyone should stay home, work from home, because, you know, the traffic's going to be diabolical because one major road was closed. So if that's sort of that was a one-day event. But, you know, if you have a pandemic, or you have a gas explosion, or who knows what, there's a myriad of different things. How's your business going to carry on or manage that? And there's many crises, big and small, that require a response. So all of these things at one time or another we've had in New Zealand. So, you know, in their individual right, they're extremely unlikely, but you add them all up, and something's going to happen at some point. And are you prepared for it? And things like cyber attack, increasingly common to small businesses as well. So what are you doing about that? Injuries to staff. We just had someone ring up. They're a customer of ours. They're in the hospital. Their vehicle's been totaled. How are they going to survive? What's their plan to manage the business when the principal of it is in hospital? So those are the sort of the things to think about. Now, the good thing is, again, because Builtin's clients are all in the construction industry, you don't have to do this. You don't have to start from scratch. We have the expertise. We have the kind of the template to start from to help you build a plan that suits your business without needing to start from scratch. We essentially are what we term a virtual risk advisor. So, you know, we're a member of your business. It just so happens that we're based in Tauranga, and we consult with you, and we act essentially as your advisor on risk. And you know, that's because we know a lot about it, and we might be managing your insurance, and we're doing your insurance claims and all of that stuff, but we can assist with all of that non-insurance related risk management as well. So we have a process that we follow and a whole bunch of tools that we can use to support you in that. All of that comes along with the option of an online portal where you can bring it all together. And that means it's in the cloud. And if anything happened to one of the principals of the business, other members of the business, other partners know where they can go to access all the critical information, all the key contacts, all the information, critical information on your customers, your suppliers, where are all your passwords kept, where are your insurance documents kept, where are your network information kept, all consolidated in one place so that someone can go, right, geez, well, we've got to keep this business running. And one of our partners is a franchise, and they've got 20 odd franchisees around the country. And I think it was maybe 18 months ago, one of the principals was electrocuted and killed, and his wife and his father had to take over running the business. So this is the kind of tool which can help them not to have to start from scratch and to get back up and running really quickly if something like that were to happen. So what are the benefits? Summing up now, well, you can react quicker to a crisis, not so much downtime. Customers aren't going to be pissed off, and you can get back up and running quicker. You're also more attractive as a construction partner because as part of a tender submission, you can present that you have a business continuity plan, include that in your tender submission, and immediately you rise to the top of the pile, because that demonstrates that you are a much better partner, because if something happens, it's not going to impact the deliverables on that project. It also appeals to investors and buyers. So if you're looking to sell your business or bring in additional shareholders, they will appreciate that all of this work's been done, that there won't be any surprises, and they won't price in risk into the price they're offering you for the business. So you can get a better return on selling your business because you've done this work. And ultimately less stress because you've thought through everything. What are all the issues that might arise that could impact my business? All those things buzzing around in your head or in the back of your mind or keeping you up at night. You've put them down on paper. You've got a plan to deal with them, so you can move forward. So that takes us to the end of things. In summary, as Tony said, 2024 is going to be a challenging year, but if you're organised and you do stuff and you make those pivots and you get take action, then you will come out the other end stronger, and that's really what the message is overall. So it's an opportunity to get your house in order, to identify, quantify, manage the risks and threats, work it through in a step-by-step process, and just make the changes that you need to make. Do you have anything else to add, Tony, at the end?
I think you've covered it well, Ben.
End of things? Okay, so I think I might have one last slide, which is really, if you want to have a chat, if you want to start this process, then just get a hold of us and we can do an assessment with you and just have a chat, at least to start. We've got a bunch of tools that if you want to do it yourself, we can share with you, templates and the like. Otherwise, we can talk to you about the various tools and a more robust process. I'm just going to check now to see if there's any questions in the chat. And if there are, then we'll go ahead and answer some of those. Otherwise, I think we'll wrap it up. Let's have a look. So let's see. Climate change is a scam. Okay, thanks, Mark. Whether it's a scam or not, to be fair, insurers are paying significant amounts in claims from weather-related events over the last decade, as I said. So that's not necessarily more. It's the severity of them or where they're happening. That's just a reality of a financial reality for insurers, and they're passing on the cost of those claims to their customers in the form of premiums. So everybody's feeling the financial effect of climate change through the insurance claims. And yes, we will share the recording and the slides to everybody. So you can run through them at your leisure. And I had some people put in their apologies as well. They couldn't make it, so we'll share the recording. We've got no other questions. So, yes, we do. Do end users use your service, or do you mainly insure builders? It's the builders that we're looking after really in this process. The builders and other professionals in the construction industry, rather than the building owners, if you like. We do work with building owners, commercial building owners, primarily to do this kind of risk assessment as well. I think unless anyone's got want to pop any more questions in, we will call it quits here. But you've got my contact details, and if you have any questions for Tony, I can always pass them on. Sure. But otherwise, yeah, thanks for your time, everybody. Appreciate you joining us, and
have a good evening.
Yeah, best of luck, and yeah, excellent. Thanks a lot.